Hello everyone and welcome to TTT Markets. Today we are going to discuss how pro traders think about risk without considering entries or indicators. When most traders look at a chart, they immediately ask, where do I enter? What indicator should I use? Is this bullish or bearish? Well, professional traders often ask a different question first. They ask, what's my risk? And this difference is bigger than most people realize. Because professional traders don't start with profit. They start with protection. In this video, I will show you exactly how professionals really think about risk using chart examples from EURUSD and $yen. And you will notice something interesting. Most of the time, they spend far more time thinking about risk than they do about entries. So the first chart is EURUSD. Let me open that. So here is the 4-hour EURUSD chart. And let's imagine you are looking at this setup right here. So you take a look, we have this structure. You see we have a higher low over here. Price moves up again. There is resistance from a previous top. It comes back down and you think, well, I'm going to use my Fibonacci and I'm going to enter because I think we are going to have a nice entry. We have a higher low, we have a structure. We are not moving in a downward trending market anymore. The price action has moved sideways. So here it is, the Fibo, it comes back down. You see how it reacts at the 61 Fibo support. And you think I'm going to enter here. Okay, this is the trade. This is the entry right there. And you might be thinking, well, this is a buy right there. But this is not what professional traders will immediately think. They are going to look somewhere else. The first question for a professional is going to be, where am I wrong? They are not going to say, oh, I will enter here, or is it going to be there? Or should I wait for a confirmation candle? Let's accept that this is the buying zone right here, and you have a confirmation to buy. The professional will not spend too much time thinking, oh, should I buy or should I wait? Should I wait for confirmation? Absolutely not. This is the most important question. Where is my idea invalidated? This is it. Let's mark that. Where is my idea invalidated? And I think you will agree, okay, sorry, some issues with the mouse. Let me move this level right here. And I'm going to remove the Fibo for now. So what they ask is, where is my idea, at which level is my idea invalidated? And I'm going to change the color. I'm going to mark this as red so you can see better. So I know, okay, if it moves below this level, my idea is invalidated. I am wrong. Because if I am right, okay, this is the 61 Fibo, maybe it tests the trend line again here and we have another higher low, but this trend line should not be broken. So this is the level that if it moves below, my idea is invalidated. This becomes the foundation of the trade. Why? You might say, why is this more important than knowing exactly where to enter? Because, my friends, now risk can be measured. Without invalidation, there is no trade. Many traders fall in love with the idea of making a lot of money. Well, professionals focus on the possibility they are wrong. That sounds negative, but it is actually practical because every trade can fail. Even great setups fail. But let's stay on this chart. Notice the support area. The setup looks attractive, but look at the stop placement. If your stop has to be extremely wide, then the trade may no longer make sense. What do I mean? Well, let me show you. I suspect you agree that this level, if this is penetrated, it becomes invalidated, the trade idea. So this is a long position. So where is my entry? We are saying, okay, this is going to be my entry right there. This is going to be my stop just below. Okay, what is my target? If it moves to previous highs, I am roughly, the relationship is about 1.5. Not bad, but not great. So if I buy here and I place my stop right there, I'm going for 1.5 reward versus risk. So my reward is 1.5 times larger than the risk. But if I zoom out and I look at this is resistance right here, this is a resistance, or this one. My point is I can estimate potentially how much the reward can be. So over there is 3 times my risk. But do you see what is the starting point? The starting point is right here. I must define my stop first, my invalidation zone. I'm not buying. Let me remove this for a second. And I'm thinking, well, I will buy here and it will go up there and I will make so much money. No, we start here. Because as I said earlier, if you know where you are buying, then you can estimate what the reward is going to be. You can estimate how much you can lose if you can afford this. And now I'm changing the rules of the game. Now it is becoming a mathematical game. I don't have to worry. Am I right? Am I wrong? Should I buy here? I didn't make the right decision. Perhaps I should have waited. No. I am removing all this noise from my head. There is also another reason. I'm sure you agree that this is a good invalidation zone. Let's say for the sake of argument that my stop is there. You might say my stop is there. Look how things change. The maths change. Well, now if it goes to previous high, is less than 1-to-1. Do I still wish to take this trade? So can you see that what I said at the beginning is true? Starting from where am I wrong is practical, because once you know where the trade is invalidated, you can estimate your reward and you can estimate if the trade makes sense. This one might not make sense because the risk is too large. This is how a professional will think. They don't only evaluate the setup. So let me get rid of this right now. The retail trader will focus too much nailing the entry. But the professional will say, okay, where is my stop going to be? They evaluate the cost of being wrong, and sometimes it's not worth it. So risk before reward. Here is something many traders never hear. Professionals often decide whether to take a trade before calculating the upside. They first ask, can I control the downside? If the answer is no, the trade is rejected. If you enter here and your stop must be there, if it is big enough, you might not be able to take this trade, so you reject this, even if the chart looks fantastic. Let me switch to dollar-yen. So this is dollar-yen over here. Let's take a look at a trend. How about this trend over here? So retail traders, they see the opportunity. They might say, oh, this is going up. Let me buy on a pullback. Well, the professional will see the exposure. Notice how extended price has become. Now they ask, where does the stop need to go? If I wish to buy on a pullback, where should my stop be? So if I buy here, where my stop is going to be? Perhaps the previous fractal low? Again, let me turn this to red so you can see better and understand that this is the stop. If I buy here, again, let me use this tool. So I buy there, my stop is over there, and if I am right, the trend should not be invalidated. If the trend holds, if I'm right, and this is a strong trend, then this trend line, this fractal should not be broken. So what is my reward risk? Well, based on this stop, if we go to test previous highs, I'm getting about a 4-to-1. That's a nice trade. And maybe you have Fibos, you have moving averages, you have oscillators. I don't care, and it doesn't matter how you take the trade, how you calculate the entry. What matters is where does the stop need to go. Imagine again that the stop needs to be there. Does it make sense? Yes, take it. If it doesn't make sense, don't take the trade. This is important. Professionals, they will not simply say, oh, I like the trade. They will ask, shall I reduce the size? Shall I wait for a pullback? Should I skip this trade completely? So risk determines the decision, not excitement or how much money can I make. You need to start thinking in scenarios. So this is something professionals constantly do. Let's create scenarios. So let me go back to the EURUSD chart. Before entering, and we said this is going to be the invalidation. You need to ask this. What if the trade works? What if it fails? What if it ranges? What if volatility increases? So professional traders think through multiple outcomes. Retail traders often think about only one, the profitable outcome. So why is this changing everything? Because once you start thinking in scenarios, and again, what happens if it starts trending? What happens if it moves sideways? What happens if we have increased volatility and so on? Your stop is becoming attached to one outcome. You become flexible, and flexibility improves decision making. What if we had a false breakout? Let's say, for example, that you are a breakout trader and you see this over here, you see this high, it breaks right here, and you take the trade, you go long, it broke the previous high, you think that's it, this will go higher. Where do you place the stop? So let me mark this as green. So let's say you take this trade, but now you need another stop. Now you need the stop, and I'm going to mark this as red. So you have a fake breakout, and you need to ask what happens if the breakout fails. Where is the stop going to be? The stop, in my opinion, needs to be at least below this low. Maybe if we push it, maybe let's say even below this low. So now use again this tool to calculate the reward risk and what is potentially my target. So I will do this to calculate the target. You are looking at this, that's a wide stop, and you see it gets hit. So you have to take a big risk, a bigger risk, and potentially the reward, if we assume it tests the previous resistance, is barely 1-to-1. This is a big range to only take a 1-to-1 reward risk. This is not a good trade. So that's risk thinking, not prediction thinking, risk thinking. And the position size is also very important for risk management. So let's talk about something that doesn't get enough attention, position size. Because your stop, where you decide where to place the stop, and if you start from the stop and not, oh, how much money I'm going to make, this is going to determine your position size. Now imagine, same trade, and let's take a proper one. So let me put this over there. I will use, again, this stop. We will use this entry at the Fibo. This is my stop. And let's say we think it is going to test at least the previous resistance over there. That's a 3-to-1. Same entry, same stop, but one trader risks 0.5%. Another trader might say I'm going to risk 5% in this trade. Same chart, but psychologically the experience is completely different. One trader stays calm, the other one becomes emotional. The professionals understand this. Position sizing is often more important than finding a better setup. You might say, why? Well, because in one case you risk 0.5%, you risk half to make 1.5%. In the other example, you risk 5% of your account. If you lose 3-4 times in a row, that's a big drawdown. So you are not calm. You have fear in your trading. Sometimes you even get volatility. You see this here in the dollar yen. You have volatility, you have intervention, large candle ranges. Should risk remain the same? So if you have a situation like this and you say, right, I'm going to move my stop. If you decide to sell, I'm going to sell here. That is going to be my stop. You take the entry right there. So that's my trade. Well, are you still going to use the same position size? Should the risk remain the same? Many retail traders will say yes, but the professionals will say no, because market conditions changed and the risk must adapt. So this is why professionals survive. They don't look how much money can I make. That's a big difference. Losses are normal. They say, okay, what's the worst case scenario? I take the trade, I take the trade, I use the stop, the appropriate stop, and the trade might fail, the stop might get hit. That's fine, that's business as usual. I am not going to let this affect me. So what is the conclusion here? Do not think about the profit alone. Think about invalidation zones, position size, different scenarios, and what happens if the regime changes. You don't control the outcome. You control only one thing, and this is your risk, nothing else. And again, remember this, the best traders aren't obsessed with finding the perfect entry. They are obsessed with making sure one trade can never do serious damage. Thank you for watching. See you in the next video.